Kevin Green, senior markets correspondent, to help set up the action today. All right, KG, before we get into the Fed, let's talk about where we are with markets, although, they're kind of part and parcel this week in terms of how stocks have been moving. So we backed away a little bit from records yesterday, and it seems to me that's in anticipation of the Fed. How would you characterize it?
Yeah, I would agree. Actually, if you kind of look at the NASDAQ has been on a really aggressive run over the last week and a half or so. So taking a little bit of a pullback is really not surprising, leading up to the Fed meeting as well as other economic data that's going to be happening over the next couple of days here. Now, obviously, we might see a little bit of a rotation, a little bit more of a defensive posture going into this Fed meeting here. And we are expecting a little bit of fireworks. If you're kind of looking at the S&P 500 at the money straddle right now, it's pricing in around a 0.7% move either to the upside or downside, but the volatility index is pricing in about a 1%. So you did see an increase in put hedges being put into the market here. And once again, that may have caused a little bit of a rotation when it came to the S&P 500 as well as the NASDAQ. Also keep on the radar too, the regional banks got hammered pretty hard yesterday. Maybe that's some profit taking. Once again, a sector or an industry that has been doing a phenomenal job here, but maybe they're pulling back on the expectation that the Fed is going to obviously potentially cut rates here, but may not be as dovish for a rate cut in October, which I think is probably going to be the make or break for this market, at least for this week, as we get some other news headlines to hit the tape here. So technically, we're still doing a phenomenal job, making higher highs, making higher lows above the key moving averages, Diane. But today, obviously, is going to be a huge focus, not only Jerome Powell's talks and commentary, but also the summary of economic projections, which will give us some insights as to what the Fed is feeling for 2026, which is probably more important than the remaining remainder of the year for 2025.
Yeah, and that's the question too, right? Will we hear a more dovish Fed or a more hawkish? And some of that may depend on also the makeup. The expectation is that we'll hear more dissent since we have Stephen Miran at the table now. Is that what you're seeing as well?
Yeah, the market's really pricing in Miran, Bowman, as well as Waller being the dissents, looking for a 50 basis point rate cut here. And there might be two Fed members that might be voting for no rate cuts at all, so we might see a little bit more of a split. This is going to be, if we do get these many dissents, three of them, if you will, this will be the first time since 1988, if I'm not mistaken, that we will see this much dissent going into and leading into next year. And obviously, once again, I think the market has been trying to balance out the employment picture, which does appear a little bit weak, as well as the inflationary picture. And Jerome Powell is going to have to balance some of that data and really try to convey to the market that it's going to be still data dependent, but also acknowledging the fact that there could be some weaknesses. And this could be a maintenance cut or a maintenance cycle here for the next couple of months. And if we are kind of signaling that, or if we do see him signaling that, that could be bullish. Also look at the summary of economic projections, Diane. If we look at the Fed funds rate, if they are projecting that to have a two handle, or basically starting that number with a 2%, it could be 2.9% or so, that probably will be very bullish for the equity market. That would kind of signal not only the 75 basis points that is being priced in so far, but also potentially another 75 basis points being priced in for next year. And that's something that the market has not really kind of priced in here, as of right now. So that is really going to be the key area that I'm going to be focusing on when this report does come out.
Okay, all right. And then let's talk a little bit about one stock that's under pressure in the pre-market, Nvidia. We're seeing this triggered by news from the Financial Times as it relates to China's internet watchdog. What's the latest here?
Yeah, so you are seeing Nvidia shares down on the session. Actually, the semiconductor space as a whole is kind of getting hit outside of Micron right now. You are seeing China's Cyberspace Administration instructing firms, this is what's being reported, instructing firms like Alibaba, ByteDance to pretty much stop the orders of the Nvidia's RTX Pro 6000D chip series here, as well as stopping the testing and really trying to focus on domestic production of AI chips and really focusing on their comparable performance metrics. Now, this might be another bargaining chip that's kind of getting in the way here between the Trump and the China and U.S. Trade deals. But this is actually kind of a big deal here, Diane. Nvidia has been trying to roll out some of these compliant China chips here for a very long time, and it's been very murky as far as the policy from not only this administration but also the previous, the Biden administration in order to try to provide a chip here. Now it seems like China is kind of taking the offensive and trying to go after Nvidia. We also know around the fact that there is an anti-monopoly probe for this acquisition that they had in 2020. That's also going to be a little bit of a headwind. So market is, selling off Nvidia, at least for now. We have to be mindful too. China's only around 17% of total sales. If you're looking at the 2024 comps, Nvidia has not put in any type of China sales into their guidance as well. So they have tried to set the bar, but another blow to the semiconductor industry here. And let's see if this is just temporary or if this is going to be something that's a little bit more long term that could kind of weigh on the broader S&P 500.
That's great perspective, too, about the amount of total sales, because there's one analyst I've talked to before who's covered NVIDIA for years, well before it was a high flyer, and she often makes that point that, sometimes she doesn't understand how much weight that the market puts on that piece of it, given its proportion. All right, you're also across the latest between some deals that are happening between the U.S. and U.K. as it relates to some tech investments. President Trump is over there. You've got Microsoft at the table, et cetera. Tell us the latest here.
Yeah, we are seeing President Trump in the UK right now. They actually are doing their, parade, or the pageantry is kind of taking place right now, which is very interesting to say the least here. But you are seeing maybe the expectations that some trade deals and announcements will be made here today. You are talking about this Microsoft OpenAI partnership that they are going to see with Nscale to really build out AI infrastructure, a really big build out when it comes to the UK here. And then also really trying to commit a little bit more dollars when it comes to the data center or the artificial intelligence industry just as a whole here. One of the bigger deals that Microsoft has done outside of the United States. So that has been a tailwind, at least for now when it comes to this visit. Now on the other side of that, the UK has been hoping that they could actually cut these steel tariffs down from 50%, which is now 25%, and trying to cut that down to 0%. But they're starting to lose a little bit of hope here. It's kind of a odd structure that's happening in the UK when it comes to the steel industry as a whole. And once again, that's kind of something that has been tabled. There's probably going to be some announcements around the energy front as well. That was something that was kind of alluded to last week. So expecting some deals to be announced here today. Let's see if it's going to really shake up the stock market and maybe some of these industries. But this is not only just about doing trade deals. This is probably also focusing on the defense aspect, because we do know that there is some tension between Russia, Ukraine, Russia, and NATO. And the UK is going to be a big part of that when it comes to the defense mechanism. So not only probably talking about trade, but also probably talking about defense and how they're going to move forward here when it comes to Russian aggression.
And KG, for the viewers who always tune in for your targets on the S&P 500, tell us your targets to the up and downside.
Yeah, to the upside, 66.75. Those calls have actually been printing over the last couple of trading sessions since Thursday of last week. And then to the downside, 65.70. A pretty wide range given the environment, given the announcement today. Not really surprising here. Let's see if we get a pretty decent move after this announcement from the Fed, as well as from the summary of economic projections.
66.75 sounds interesting, because that puts us closer to 6,700, potentially another milestone. All right, KG, we'll leave it there. That's our Kevin Green, Senior Markets Correspondent.